Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 16th, 2019. In this video, I want to take a look at the companies that are scheduled to report earnings this week, as well as a few that just have. And what I want to do is every week do a video highlighting not all the companies, just the big names, the ones that potential market movers, leaders of, the top components of a sector or the market as well. And keep in mind, we've just gotten into earnings season. It's just getting underway. So far, most of the potential, and I'll use put quotes on the word potential, potentially market moving stocks that have reported have been the financials. They come early in earnings season. We've had a few out already, a few more to come. Now they haven't really done anything. The market just continues to be in a very slow upward grind. You can see these tiny little candles uh, lately for weeks now. These candles, are dwarfed compared to what we saw earlier this year. The size of these candles, so the price compression is very tight. We're certainly inching our way up, very slowly and steadily, while we continue to build divergences. However, divergences, I always say, they're not a sell signal. They're merely an indication that an impending trend change is likely. They can be burned through, in which case we don't have them anymore. And if we go on and pop new highs and go off to that blow off top scenario that some are calling for, the divergences would be burned out. Otherwise, watch for a sell signal. We're precariously close, and we're starting to hug that trend line, and that's a sign of waning momentum. Before we'd kiss it and we'd bounce off. So far, you can see momentum is waning. We're moving up. Again, zero sell signals, particularly here on the daily time frame, which is most significant. But that's what you want to keep an eye out for, especially the like I like to say, a little slang talk, but the redder the better as far as a candlestick goes. If you break that, you want to see both SPY and QQQ break it. You want to see big red movement intraday if you're going to jump in and short that. And ideally a solid red close below there. Otherwise, you could, this low volatility, you could, get a little whipsaw signal. That's not unusual, especially with earnings season getting underway here. So there's SPY, there's the trend line. Quite a few reactions, especially lately. And again, it wedges higher. Same as QQQ right now. Here's QQQ, trend line off the lows on late December. And remember, we just kissed that yesterday. Another kiss, so that's the 1, 2, 3, 4, 5, at least a fifth or sixth reaction there. And same story. Look at the size of these candles. Look at this price compression. The bodies on these candles lately are just a couple dojis right there. Another, almost a doji here. It's doji city lately. And again, they're just that's it. We're walking our way up on diminishing volume. So market may continue to stay in a wait and see mode. Again, we have a lot of the big market movers are slated to report the end of this month. Most of those in the last week or so of April here. So that's when the market will most likely pick a direction, after you have Apple, Facebook, Microsoft, Amazon, all those companies out of the way. So we'll get to the let's just go ahead and dive into the earnings here. Now to get to that, there's a lot of earnings calendars out there. The new support center on right side of the chart, if you go to the top of the site, the top menu, go to resources. This is our new support center here, and I've moved the tools of the trade over to there. Tools of the trade have different things like the position size calculator, economic calendar, great tool for swing traders and investors alike. Be aware when big market moving events are coming out. Usually a lot of those events are often scheduled in the morning before the market opens. And of course the earnings calendar. There's a lot of them out there. I'm partial to Earnings Whispers, because what they do is they'll sort the stocks, not show you 50 different companies that are scheduled to report, and then you have to sift through it. They'll rank them in order of significance. The bigger, more important companies, more popular companies up top. And you can sort it any way you want, but that's the default there. So you can look at all earnings if you want. And one other thing too, keep in mind, whether you're a swing trader or investor, you should know when your companies report. And at the top of the page right here, well, you know what? I have that cut off just slightly. Let's try to get this in there for you. Oops, let's see, where did it go? Okay, a lot of things up on this monitor here. All right, we have right there. There it is at the top of the screen. This is where you want to go if you are trading a certain stock, if you own a certain stock or considering it. Type the ticker symbol in. It will tell you when they are scheduled to report next. All right. BMO is before the market opens. AMC is after the market closes. So let's dive in and start with today. We had Bank of America, United Health, Johnson & Johnson, of course a lot more, so we'll just look at these top four real quick. Those are market movers. BlackRock I'll get to because you have Larry Fink out. He's the CEO of BlackRock, and they're very obviously they do well when the market does well. They have a lot of assets, and most of the assets under management, things they have are long side investments. So Fink came out today pumping the market, saying that he sees a risk of a blow off top, melt up instead of a meltdown. Take it with a big grain of salt. Any more than a famous short seller might come in and he's going to say the opposite. So let's look at the charts. Start out with BAC. Let's go through these in order here. Pop this one up, go to BAC. Obviously Bank of America, one of the leading financial stocks. Here's what I see on BAC. Here's my lines. You can see all the divergent highs, divergent lows, and where the stock has gone. So right now, that's what stands out. We have a couple things that stand out to me. We have potential divergence, and I say potential. To me, there's a very big difference between potential and confirmed. Potential means that right now prices are making a higher high. So many would consider this negative divergence, and it is negative divergence, but it's potential. But the momentum indicators here, particularly the PPO, is still pointing higher. And it could continue higher. However, if we get a bearish crossover, then we have effectively put in a lower high at this point, and that could happen. And what's also interesting, look at the downtrend line off the highs. Boom, we failed right on that downtrend line off the highs. So, unless if Bank of America can power on through there, next stop or next resistance about 31.38. I'll tell you this, it's got some room to go up and still keep those divergences intact. So this is one to keep an eye on because the financials are one of the biggest sectors, the top weighted sectors in the S&P 500. They make up almost 14% of weighting in the S&P 500. And the other day, and we've had quite a few banks report already, you can see we have, as I said here, divergent high, and I drew this scenario out the other day before some of the big banks reported, said, look, we had resistance at 25.13. Dual resistance levels. That's price resistance. I'll show you why here real quick. Lots of reactions along that line. There we go, some reactions there, and it's also the 61.8 Fibonacci retracement level, and that's from this move off the highs right here in 2018 down to the lows. So a significant level. Now we already failed there once. We had a divergent high and we had a correction, and that brought us in to back test this trend line, and we moved higher. And so at that point, I laid out a scenario, and I'm still on watch for it. We'll see. We'll have to we have to see it start to materialize. But that would be the financials. Come on up, take out that level. It's nice to see levels popped and then a reversal, because you tend to suck in some more longs and scare out some shorts. So just again, something I'm on watch for. I wouldn't act on it yet because we don't have any sell signals in the financials. But when we go through the big stocks like Bank of America, that might give us some clues. So there it is. So if we can pop there slightly and then we start to reverse, there's a little gap below to be backfilled. It actually was backfilled the day after. But if they take that gap out and we start to move lower, that would be longer term bearish for the financials. So I'm not digressing here. I wanted to again talk on that because Bank of America is one of the largest, and so they reported today. Let me grab that earnings calendar again. Oh yeah, UNH. UNH, as I mentioned on the site recently, one of my favorites long-term tuck it away short. I mentioned that I'll probably add this on as an official trade. I even said personally I was going to start taking a position ahead of earnings. Normally I wouldn't add a stock, and I didn't in front of earnings, and I still have my concerns for two reasons. I can see some potential divergences building here, and also the stock market. The stock market refuses to go down. And while UNH, as you can see, has been moving lower as a component of the S&P 500, you want to see the wind to your back on a short trade, and that means the broad market moving down as well. So I may add this one on soon. If I do, I'll have to give it some pretty wide stops. That's the nature of this market. Since the trend has been up, short trades have been very difficult. So we'll hold off. But when I look at this long-term chart, this is just beautiful to me. Very, very, very well-defined long-term uptrend line. We had that solid weekly close, and we're still well below that trend line now. So we're coming up on support, which is my first target there, around 209.82. So again, I'll keep an eye on it, but I'm looking longer term, and I'd like to see the broad market give me a little more confidence to add on some of these long-term, so I call them long-term swing short trades. But I'm looking for a drop there about 40-something% in UNH. It might take a year or more to happen, maybe not. But that's one that I'm watching. And again, that's one that reported today. Oh, by the way, here's what you can see. So this tells you that I don't know. I had to run out this morning, do a few things, so I wasn't around right when the market opened, but I can tell you this, it probably was rosy earnings. They probably beat forecasts, but what I was talking about in the trading room, and I think on the front page, is more of a macro fundamental story, an issue with the PBMs, the pharmacy benefit managers like UNH. And so I think the gig is up, at least for a while on these guys as far as their profits go, and with their kind of sneaky rebate pricing that they work with the pharmaceutical companies. So again, it's just a fundamental play for me as much as a technical play, but the technicals are certainly there. And so here's what happened. There's yesterday's close. They popped it. So I guess whatever they said or reported this morning was rosy. But then here's what happens. Doesn't matter what the numbers are, and that's one thing. If you're new to trading or investing, if there's one takeaway from this video, it does not matter how rosy a company's earnings reports are or how poor they are, for that matter. It's what the stock's reaction is and what the technical posture is. I've seen companies blow earnings out of the water, blow away estimates, and then top and turn around and start a bear market. And I've seen the opposite. I've seen companies come out with abysmal earnings that couldn't sound any worse, and that marked a bottom or the beginning of, bottom of a downtrend or a bear market or correction, or the start of a rally. So far, here's what happened. They took that gain this morning, which was, by the way, a gain of a pop of about 3%, and turned that and faded it down to the tune of almost 9% so far today. So it's just telling me that what that probably is retail traders, aka, hey, I'm a retail trader, dumb money, getting sucked into the whatever was reported by UNH, whether it was their actual numbers or their forecast, and then the smart money or the institutions taking advantage of that and selling. At least so far, that's what that appears to be, because that's a pretty hard fade and a big red candle there. All right, let's not spend any more time on UNH. Again, it's getting close to support. Support. My first target area here, so that's why for the time being I may just hold off. But again, I tell you, I like it, especially if you already had a position, maybe layer on here. And again, when that level goes, that'll be the next objective short entry. It would be best to see it come on down, have a reaction here, consolidate for a while, maybe bounce. I'd love to see it come back to that 231.45 again. Probably won't, it's my guess, and then take the next leg down from there. All right, next up was J&J. Yeah, that's a big one. We'll talk on J&J. It's one of the largest in the healthcare sector. I don't have a strong opinion. You can see my chart in the past. This is what you look for in a stock like this. You look for big divergent highs, and then trend line breaks, and you get your major corrections, and you look for positive divergence, divergent lows, bullish falling wedge, breakout back tests, uptrend, wash, rinse, repeat stuff, divergent high there at the top. So that's what you're looking at in the last 2 years. 2 divergent highs and a divergent low right there. Where we're at now, let me just take a look at this chart and tell you what I see. It doesn't jump out and scream go long or short. It is, at this point, technically it's a divergent high right there. That line I just drew, you can see the negative divergence. What would give me pause? See the PPO signal line, the 9 EMA, the white line is turning up right at the 0 line. I use that to define trends. Bullish when above the 0 line, bearish when below. It works pretty darn well on a lot of stocks. Not every stock, but a lot of them. So when that white line is above the 0 line, the trend is bullish, as you can see above. When it crosses below, it's bearish. Not only that, I'll give you one more. The nice thing about that 0 line, it often acts as support or resistance when tested from above or below. And so you can see we're crossed above it right here, a clear crossover, and we're coming back, we're back testing it. Therefore, I would hold off for shorting. First of all, there's no sell signals at all. We have an update today. There's divergence, but again, that divergence, just like back here, can continue to expand as prices go higher and higher. So there's J&J. And one other thing I'll show you too is an uptrend line there. We have 3 reactions so far, so that helps to validate it. So here's our wedge forming now. Potential divergence, just something to watch. And this one may prove to be a short trade sooner or later. I don't want to spend any more time on it. Let's move on to some of these other stocks here. BLK, I said I'll talk on that one, and I'll tell you why Fink was pumping the stock. I think his company's coming up to resistance. There's BLK, BlackRock. I see dual resistance levels, not one but 2. I see negative divergence. Here's the stock, 468.30. Look at that, nice. Look at all those reactions right there on that level. Look at all the reactions back here. If it can pop that level and pop this trend line, obviously that's bullish. As I say, resistance is resistance until and unless taken out. So right now you have intersecting resistance levels coming into play, and you have potential divergence. No, it's not confirmed yet. So if the stock fails here on or around 468, and it starts to move lower, that divergence would most likely be confirmed, and this one may prove to be a nice short. There was also bullish divergence here at the lows, by the way. There's your positive divergence. It was a catalyst for this rally. If it can break out and hold above that level with a convincing breakout, next resistance here is about 506 or so. So that's it. So again, it's at resistance now, and unless that's taken out, I certainly wouldn't go long. If I had to do one of the two, it's TA 101. You short a bounce up to resistance, again, if the indicator's confirmed. But if you have to do one of the two, you hold off. If you're bullish and you want to go long, you wait for a breakout. You don't go long just below support, especially dual support levels. You can short, and the reason that's objective is because now that earnings are out of the way, you can do so with a stop not too far below. So you quantify or minimize your loss if wrong, if it pops through there. So anyways, we'll follow up on that. And again, with any of these names, if you're a member of the site, Gold member, just drop me a line in the trading room, and I'll be glad to do an update later on. All right, we'll go a little faster here on the rest of these. That was this morning. This is today after the market close. As you can see, we have some big ones. I'm going to run through these a little faster. Netflix is certainly on my radar for a potential short. IBM, CSX, UAL, and IBKR. That's Interactive Brokers. We'll go through those. All right, let's look at Netflix first. Netflix, I've covered this recently. I know this is a busy chart here, but I'll try to do it for a little cleaner version here. Let's see if I can let's do this. Let me just put that trend line up here. Okay, so this is the golden level right here, and I have that also on this chart here. It's 380, 381, give or take, and that is a level we've had several shorting ops. In fact, 3 official short trades. Well, I had 3 last year. I can't recall if they were all off that level, but first one was right here. We waited for earnings, popped up, waited patiently because it had gapped down or moved down too much to short. It kicked back to resistance, got a short, and milked that move. Came back up here. There was a rising wedge, and we shorted that one. I can't remember. Covered somebody somewhere here. We had one other short trade last year in 2018, and that one hit our first target. So here's where we're at now. The stock put in a divergent low, and it had a nice rally. The million-dollar question: did that divergent low play out? Is this rally, over with now. There was your wedge type pattern. There was a breakout. All I can tell you is that 383-ish level with significant resistance. We just tapped it again recently. This one reports after the bell, so it wouldn't make any sense to do anything right now unless you're a pure gambler. You can go to Vegas, roll the roulette wheel, bet on red or black, because that's what you're doing here. You're either gonna win or lose, because this one has a history of gapping, and that's what I was saying earlier in the video. It's not only important to know when your companies report that you're trading or your positions or potential trade candidates, but also, even more importantly, what is the history of that company after they report. Netflix is a gappy little sucker. That's what I refer to as. These are probably earnings-induced gaps. I know this was an earnings-induced move. So here's a stock that you're all but guaranteed to have a pretty good sized gap when this one reports. Some companies do a better job of managing earnings expectations. Some have more volatile earnings, like Netflix, and so therefore, like I said, it's best to just let this one get it out of the way, see how they report, and then we'll take a look at it tomorrow and see if there's a shorting up there. Also, one other thing to show you here. I'm watching this 50-day moving average. See that yellow line I have turned up here? It's done a pretty good job, not perfect, but a pretty good job. Uptrends, it acts as support. When you break below it, it acts as resistance. Got back above it, support, 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 support. Downtrend, it was resistance. A little choppy right there. There were some whipsaws there, but other than that, see, it's done a good job of defining the trends. When the stock is below the 50-day, it's bearish, and when it gains it, it's bullish. So that's another thing we'll watch for tomorrow or later this week. Maybe it doesn't happen tomorrow, and then we may get a short trade. Or hey, if you want to go long and they stay above that 50, and especially, I'll tell you that, if they take out that level, that 383-ish level, with conviction, that would be bullish. Then the stock will probably make a run at and maybe above the all-time highs there. So there's Netflix for you. Next up was IBM. I don't have a strong opinion. Divergence building, but again, not confirmed. And again, that's not a sell signal, nor do I see one here. So we'll just have to see what happens after they report. CSX, we'll look at that one because that's a big railroad company. See divergence building, like everything else in the market right now. It's just not playing out. We need a sell signal, so we'll watch that one. This is a busy chart, so I should have cleaned that one up a little for you first. UAL. We'll cover that too, because that's one of the bigger airlines, and it kind of gives us an idea of what's going on. So it might be a potential second right shoulder here. I had a potential, see the question marks, left shoulder, head, right shoulder. That's a nice looking head and shoulders pattern. And whether we come up and whether that's a smaller second right shoulder, sometimes you have two shoulders on one side, sometimes you have two shoulders on both. That's called a complex head and shoulders pattern. But we're coming up here and we're back testing this trend line. So let's see what UAL does. If it pops above there, it still has potential to put in a second right shoulder, and then that pattern could go on and break out, or may foil that potential. I have just question marks there because I'm not that confident on that pattern yet. I'd like to see it a little better. I didn't see really volume confirmation on that formation of the right shoulder. That's one thing you want to check for. There's certain criteria for volume patterns in the formation of a head and shoulder. So either way, at resistance, back testing there. Let's just follow up and see what that one does after they report. And then IBKR only, but yeah, this is my broker. A lot of you guys probably trade with Interactive Brokers. So it's one of my brokers. I don't have a very strong opinion here. It's kind of grinding around sideways. That's not my type of pattern. Let's move on. Look at a few more and close this video up. All right, that was where am I at on the calendar here? Here we go. That is today after the close. And then tomorrow, Morgan Stanley, Pepsi, Abbott Labs, Bank of, see, quite a few financials. Look at all the banks here. So let's just look at a few of those. MSPP. Morgan Stanley. Certainly in an uptrend. We don't even have divergences. Story on this one, it took out a trend line here, and that was pretty bullish right there. It was a well-defined trend line. Breakout, back test, and it's been moving up. It is coming up on resistance. All of these lines are there for a reason. So this is more of a resistance zone here. It runs from about 46.40 up to about 47.60. Some work to be done if it can power on through there. Next stop might be all the way up here at about 51.50. But it's overbought. So, how much more is it going to run before a correction when it's overbought? And again, let's see what happens once they report, because the technicals can certainly change on that. Let's see, what else did we have? We had Pepsi, PEP. Pepsi is interesting. It's flirting with it's probably all-time highs, or certainly multi-year highs. It's struggling. It's tried to take that out so far. But it has potential to put in a triple top here, 1, 2, 3, if it fails. Here's the uptrend line to watch. It's already broken out to new highs, but that new high was smacked down yesterday. Again, I don't know who in their right mind would take a breakout 2 days before or a day before earnings. To me, that's just it's not objective. You're just gambling, because who knows how the earnings are going to go. So that's the other takeaway, and that's why I say know when your companies report. So there was a breakout yesterday. You can see the big green candle, and this is what I'm referring to. All-time highs or multi-year highs, and it got smacked down today. You're going to have to wait and see what happens after they report. If it's bullish, maybe that breakout sticks and the stock goes on, and then you can go long and set a stop a little below 122. I wouldn't go right at 122. That's about where the highs go. Below those recent lows, about 122.59. You're only talking another % or so, and then let it run. Another stop would be also below this uptrend line, and that would also be an objective shorting op if it breaks. So those are your levels on Pepsi. Bulls want to see this. Bears want to see this break below that trend line. All right, and if anything stands out on the weekly, a lot of the weekly charts look very toppy to me. I won't even go through those in the video. You're going to see the same thing on the majority of these companies. Let's see here. Abbott, Bank, ABT, Abbott Labs. Little uptrend line here that was just broken. Divergent high right there. We had a divergent high back here. So here's an uptrend line, a more significant uptrend line that goes back for quite a while off the 2017 lows. We had a brief breakdown. We hit support. We snapped above it, but there's still enough reactions. I think that level's valid. So that's the trend line. Use log scaling. Come off the late 2016, early 2017 lows, and that's the level to watch. Again, the divergence tells me, and we've already broken down, that one's probably going to take out the trend line, but as I like to say, support is support unless broken. So you want to see that level go, as well as that 50-day moving average, that yellow line there. That's ABT, and there's what it looks like on a weekly chart. That to me is clearly bearish, so I'd be looking on that one again to position short, and that's the same trend line again off the late 2016 lows. And when that breaks, here's the last time we had a comparable wedge on the weekly chart. I'm going to measure it out from that point to the lows. It dropped about 28%. And it could most certainly do that again. In fact, I would give it a target of, from where we're at now, I think it would come down about here, and that'd be about about 18%. Remember, we're already a few percentage points off the highs, so it'd be a comparable drop right there for ABT. Okay, so those that I just went over were that's Wednesday before the market opens. Now we're on Wednesday before or after the market closes. So we have AA, Alcoa, Aluminum, URI. We'll just stop there. Look at those two. AA, let's go here. AA shows a downtrend line, pretty clear, and that needs to get taken out for a bullish run up. And you know what, there's also level right here. We had a little pop above there, but I see a lot of reactions here right around $30. So you want to see AA pop $30. If so, it will have taken out that trend line and price resistance, and it could run all the way up there to about 35. I'll have to sharpen my pencil on the targets. I didn't spend a lot of time. No, let's say 33.64. However, here's a downtrend line, so it's really forming somewhat of a triangle pattern here. I should have said uptrend line right here. Break of that would be bearish, and this one's just way down off the highs right now. I don't know if this probably has a lot to do with the trade wars as well, because this is Alcoa, aluminum company, down 60%. Just doesn't bode well for the economy, but again, it may be more trade war related. And it's not like it was just random and completely caused by the trade wars. You had a clear negative divergence at the high right there, big divergent high, and that led the way for the drop. We don't have divergence at the low here. And if I took a step back on that one, well, I don't see a lot. That's a messy chart. I'm not going to try to squeeze water out of a rock. If I look at a chart and it doesn't stand out to me, it's clearly bullish or bearish, move on to the next one. Speaking of the next one, URI, this is United Rentals. I follow this company only because a good friend of mine, he manages the United Rental locations down here in Southwest Florida. In fact, I need to get in touch with him, find out how things are going there, because this one is sort of a tell, at least in the markets they're in, and I believe they're nationwide. They're a big company, and they rent out anything from a chainsaw to a giant crane, backhoes, heavy machinery, generators, that type of stuff. So construction's booming and everything's going good. These guys, their business is good. It tells you, a lot of companies are way down, like this one, way down off the highs. The chart doesn't jump out to me, but again, just watch that to kind of get an idea of what's going on, around the economy. It's one potential indicator, if you will. Okay, and then finally, Thursday. Looks like earnings whispers. Let's see if it's working now. If I click on Thursday, it's not. See, when I click on the 18th, go to Thursday. I'll try to do it this way. It loads Friday. Friday is Good Friday. The markets are closed, so nobody's reporting. And for some reason, they are not loading any of the earnings to report Thursday. So we'll go here to a backup. Let's go to StockTwits. And here's some of the companies reporting on Thursday, and they do rank some of the bigger ones up front. So I'll only go over two more, and we'll wrap it up here. ISRG, because I'm eyeing the medical devices right now as potential trade ops, or at least some of the stocks in there. And American Express. I'm also eyeing the credit card companies, Visa, MasterCard, and American Express. So let's look at those two, and we will wrap this video up. ISRG, this is what I'm seeing a lot of, not a lot of, but a few of these. A beautiful wedge. Look at that wedge. Oh, just breaking down impulsively today, but right before they report. They report in a couple days. So again, do you want to step in front of it? This sucker can move. But last time I had a breakdown on this one was right here. We had a long-term trend line, goes back quite a way. You can see it here, all the way back to early 2017. We had one little period where prices dipped below there and then shot back up, but enough reactions to certainly validate that trend line. And from the breakdown alone, not even just the divergent high, just where it broke down, the stock dropped 20%. Now this is a nice clean wedge and double top high failure. Look at that. There was the previous all-time high right here back in October or so, and we popped just above it. See, this is what the market could end up doing. That's what I said. New highs usually get run once you get close to them. So here's what happened with ISRG recently. Now again, the stock's going to report in a few days. So if they weren't, I would be shorting this one hands down right now. But they came up here, had a run, we held under, boom, popped it, green candle, breakout, right? Probably not great volume. Either way, traded above there for a few days, but the breakout failed. And now they've broken below the uptrend line support, which is a wedge, pretty impulsively. But again, is it objective? Yes. But is it risky because they report? Yeah, it does increase the risk. What do you do? Because sometimes these things get away from you. I can tell you this too, and we're going to wrap this up here because I'll only cover one more stock. I'm a big believer, only because I've seen it over the years, that more often than not, which by the way is far from always, but more often than not, if a stock is set up in a clearly bullish or a clearly bearish technical posture before they report, the earnings are going to go, or the stock will go that way following earnings. In other words, you don't often see, it happens, but a clearly bearish pattern, there's a rising wedge confirmed with negative divergence, everything you like to see on it. So that says more than likely this is where the stock is going to go. Not exactly in that path, but it could pop up here. And again, with earnings, sometimes you get knee-jerk reactions. Sometimes you get a 1-day or 2-day pop and then followed by a reversal. So that's why you just have to keep it light. So what you can do is you can certainly take a starter position. I just wouldn't go to a full position on this kind of stock right before they report. So there's ISRG, and look at the weekly chart. Same thing. This has just been building divergences for a long time on the weekly chart and broke that primary trend line there on the weekly. There was a wedge. Just looks like the stock market itself, breakdown, coming back testing the previous highs. And then finally we had one more company there I wanted to cover, AXP. Actually, I don't know if I have much on AXP. Let me look at that chart. There's a long-term chart, AXP trend line. Yeah, there it is. Here's a trend line off early 2016 lows, breakdown back test. Here, let's look at that on a daily chart. We can do that. No, I don't have it marked up that way. So we go back here to a weekly chart. There's a trend line off the early 2016 lows, breakdown back test, and a divergent high. I am bearish on this stock, and will most likely be short AXP along with MasterCard. Divergent high. Here's a weekly chart on MasterCard and Visa. All these tell me the same thing. These guys have limited upside, and we're probably looking at a double-digit drop coming up soon on these guys. So we just need to hone in, and I'll have to check Visa and MasterCard, see when they report. There's the uptrend line on Visa right there. There's your divergent high, a little wedge type pattern. See the negative divergence. Nice little setup, and then MA. Well, same story here. Breakdown, and there's the targets for MA. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.